All right, you're looking at a daily chart of the Nasdaq. Let me see if I can get this thing on scale here. All right. Anyway, since July 19th, we've had this nice sell-off here. It reached 9% on a Friday, and we had this pink rally day, which was day one of an attempted rally. And day two, yesterday was a nice strong day, but today was day three, and it came up against its 10 EMA and got rejected here, which you can see it's done many times, not many times, but a few times during this sell-off. And so it needs to get through this area here, this green line here, as it keeps coming up to the green line and getting rejected, which it did once again today. So you got to ask yourself, has the market proved itself for you to get, stupid long again and step on the gas? And to me, the obvious answer is no. It has to get through all of these moving averages and start trending higher before I step on the gas once again. Today it started higher. This is a Tuesday. Obviously, Monday was a nice day as it ramped higher, but today it started higher and then continually sold off. Very cautious ahead of, there's supposed to be an earnings report tomorrow, and Jerome Powell speaking on Friday from Jackson Hole. So it looks just a little bit of caution today. What the Nasdaq needs here is a follow-through day starting tomorrow, day 4. And the reason why you wait till day 4 is to make sure that this is not just a short covering rally. And so the day 4, this thing could 4, 5, 6, 7, 8, whatever, hopefully between 4 and 7 seems to be the most successful, that it rallies through the 50 here. So through the 10, the 21, and the 50, and starts a new power trend. We just take it one day at a time, be open-minded, flexible. And like I said, the market has not proven itself, so there's no reason to get too frisky here. A lot of caution ahead of the new data points. Anyway, this is the S&P 500, and you can see very similar action to the Nasdaq here. This one being rejected at its moving averages. I did want to point out for the Nasdaq, you can see the S&P's traded below its 50 for 1, 2, 3, 4, 5, 6 days now. And on the Nasdaq, it's closed below its 50 for eight consecutive sessions. 1, 2, 3, 4, 5, 6, 7, 8. And that's the first time it's closed below its 50 for this many sessions since the December time frame. And you can see, we had a rally obviously in January, but just to take note, it's been below the 50 for 8 sessions. So it needs to prove itself to lure me back into the market. You can do whatever you want, but for me, that thing's got to prove itself. This is the shaking my head semiconductor ETF, and it's been below the 50 for a little bit. You can see a clear rejection today as it rallied up to its 50 and just got rejected and closed, well below it. That was pretty strong rejection there. It got the Matumbo treatment and is 2.1% below the 50. So if you're wondering how far the Nasdaq is below the 50, I believe it's 2.2%. Yeah, 2.2% below the 50. So like I said, make this thing prove itself. Ask yourself, is the Nasdaq proven itself to be in a new uptrend? I would have to say at this point, no. I'm going to take my time and allow it to show itself either to the upside or the downside. So just be open-minded and flexible to that. I'm going to go through some oil stocks. Oil has been down recently. It peaked, and now it's the West Texas crude future contracts are below $80. So it was, near mid 80s, and you can see the nice run in a lot of oil stocks, but most of them have pulled back. This is Permian Resource, and they bought Earthstone Energy yesterday. And usually when you buy a company that goes down, this one went higher. You can see the long consolidation period on the weekly chart. It's been a long time, and now it's breaking out above its a base here and showing a lot of strength. So Permian looks good. I did mention Earthstone, and I usually don't like to get involved with acquisitions because they can backfire on you and fall through. And then it comes back to $16 or whatever if the deal falls through, or maybe even lower. So that's why we just take the money and run, as Steve Miller would sing. This is Earthstone Energy. You can see the nice gap up higher and holding its gains on the the buyout, and today followed through 2% move. So congrats to the longs there. CRC is California Resources, another one that got to look at the weekly here. Nice long consolidation period, broke out. Now it's just holding its gains. CRC looks pretty good to me. And then XPRO is another one that I'm watching. And it's, got a consolidation here, a cup with handle, and just pulled back here with lighter volume. So to me, XPRO looks pretty good. Looking for that, there it is on the weekly, and you could see 3 weeks tight pattern in there and just pulling back. So yeah, it's another stock that I like the setup. And more stocks that I like are the data centers in construction plays. This is Vertiv VRT. This one gapped up on earnings. Now it's just holding its gains. It's being supported at the 10 EMA. So obviously another strong stock that is doing well, even as the Nasdaq pulled back. This thing's been appreciating, so showing relative strength. You can see the relative strength line there. STRL is a Sterling Infrastructure, another one that is gapped up on earnings, now pulled back to the 10. Those two look pretty similar, and not being affected by the weakness in the Nasdaq or the correction that we've had that I showed from July 19th. Power's another one. This one's on our ready list tonight. Is I like the flat base pattern. It's got a 5 weeks tight, trading just above that 206.43 level, and that's a nice little shelf, if you will, or a flat base pattern. You can see it's pulled back to it's 50 a couple times here recently. But another stock that I like is Caterpillar in this group. This one pulled back, closed below its 50 today, which, it's not a big deal. It comes back down to its 50 or near its 50. But this one is pulled back with lighter volume here. And now down just slightly below its 21. I believe it closed today. Not a big deal, 1% below the 21. So I'm looking for some strength in this stock. You can see the big cup with handle and the breakout on earnings here on this day. And now it's just pulling back to moving averages. Yeah, it's a big move, $23. Yeah, 8% move with good volume. So another stock that I like. Anyway, I'm going to move on to the electrical manufacturing stocks. This is Fabrinet, man, what a gap higher, 31% move with more than 600% above average daily volume. I just looked at the earnings report. I guess it was okay. I didn't expect this kind of a move. They did have a stock buyback. They introduced a stock buyback program, which I think helped propel the stock. But anyway, that type of move is not to be ignored. You could see this is kind of like a rough cup with handle, and boom, nice move higher today. A couple other stocks in that group. I was looking for some pin action. JBL, not much. This one looks a little bit like the Nasdaq, right? Pulling back below the 50, trading now below the 50 for 8 sessions or so. And the other one is CLS, which had a gap higher, and this one looks like those ones I showed earlier, Sterling and Vertiv, were gapped higher, now pulled back to moving average. Today was up 3.7%, in concert with the news from Fabrinet. Anyway, I got to get to the retail stocks. I thought some of these retail stocks were going to really blow up today because of Dick's, and some of them held up okay, which kind of surprised me. But Dick's, you can see they hit the grand slam. They missed on earnings, revenues, lowered guidance, blamed shoplifting or shrinkage. And I got to believe that if this shoplifting continues to haunt Target, Walmart, they're just going to go more direct to consumer and shutter some of their stores, because this is a real problem. And Dick's, I was really surprised. This is a well-managed company, and they just missed on all metrics, down 24%, the largest one-day loss ever. They lost a quarter of its value in one session. So that's a pretty tough move and a pretty tough look for Dick's. Macy's didn't fare much better, down 14%. This is only a $3.5 billion market cap stock. Now, Macy's used to be a department store stalwart, but not any longer. Shoppers, changed their habits. And but still, that's a rough haircut. And you think there would be some stock selling off in sympathy with that move. COTY, not a great number either, and they traded down to their 200 today. And I thought with those numbers that we'd see weakness in ELF, and ELF just kind of traded flat today. Last week it sold off hard, maybe in anticipation of this terrible data today, but it sold off down to its 50, and now it's holding the 50, so that's a good sign. A couple firms came out and said the sell-off in ELF was a little too strong, and I don't know, they think it needs to be supported, but we'll see, one day at a time. Crocs is another one. Some people are asking me, why don't I talk about Crocs anymore? Well, because it's below its 200. And now it looks like it's going to get rejected here at the 10. I was surprised that it was up today, but it's right up against the 10 here, so I wouldn't be surprised maybe it got pushed back down and just continues to form a base here. But so there you go. I covered Crocs today. The leader in the shoe area is no doubt Deckers. The Hoka shoe is really taken off. They've had Hoka for 10 years, but it's just starting to, in the last year or two, just starting to catch fire. So you got to give these companies time to figure out, their new acquisitions. And Hoka is a shoe that I like. I use it in the gym, and this one is down less than 1% today, even though all of that horrible data. So Deckers is definitely a strong stock. Target is one that, reported, kind of held up, and now it gets pushed down from the, if you see the 50 here, the red line, it came up to the 50 after earnings and just got pushed down the last couple of days. This looks terrible. 124 now, and they had, the same problem with shoplifting. And anyway, it's unfortunate. Celsius is one beverage or consumer stock that's holding up. You can see the gap higher in earnings, pull back to the 50, and this one looks really good. And the other one is cocoa, the other drink. Yeah, so this is a wild move on earnings, but still holding its 50, trading sideways, and that looks fine to me if you're a shareholder. Couple stocks I really like. I'm going to get out of the retail because it's a really morbid scene. And then the HVAC, the heating air conditioning group, this is one that I like. Why do I like it? Well, they're going higher. I only like stocks that are going higher. This is Modine, gapped up on earnings and pulled back to the 21. Now the last 3 sessions are traded higher with volume. Some volume coming in on this one. That's MOD is the ticker symbol. A couple others in the group that I really like are Fix, Comfort Systems, and this one, it's broke out of this base and it's pulled back to the 50 a couple times, but just mostly riding that 21 higher, and that one looks pretty strong to me. Pulled back to the 21 recently and has been up the last 3 sessions. Linux is another one in the group. This one is trading above its 50, and I wanted to go to CARR. That's the one that I wanted. Yeah, pull back to the 50. Now that looks a lot like the Nasdaq, except for what's the difference? It's above the 50. Found support there. Now it's been up the last 3 sessions as well. So the air conditioning stocks look pretty good to me. And I'm going to close with the drug stocks. Lilly, not much to say here. This thing, be on our heat list. Just one of the hotter stocks in the market. Just a one-way stock, broke out of a base and just trading higher. NVO, not quite as strong as Lilly. Had the breakout on Lilly's earnings and some data from a study they did. And then after their earnings, it kind of sold off a little bit, but still trading above the 10 and doing nothing wrong. That looks fine to me. Novartis is another one, had a double bottom base, broke out, now pulled back to the 50 for the first time since the breakout. That one's doing okay. And APLS after hours, they had news about an injection kit, and I have to look more into it, but it's up like 40% after hours, and it had a big sell-off because a competitor had a positive phase 2 or phase 3 trial, and that's life in biotech land. You wake up one day and you're down, what did this thing go down, like 40% or 37% in a day? That hurts. And then now it's up 38% after hours. That's just a wild ride in the biotech stocks, and that's why people they want to stay away from them, because that's way worse than AEHR on the heart system. Anyway, that's it for me today, except for in honor of Steve Jobs. I have one more thing. There's a reason the Nasdaq might have been a little cautious today. There's this little known stock that nobody talks about. barely even heard of it, called NVDA, and they're reporting earnings tomorrow. Just want to point out, the ascending base pattern, it did pull back below its 50, now traded above. It made a new high, I believe, today. Yeah, got above that old 480.88, and then it immediately pulled back. But, this thing's going to move on earnings. I don't know which way. It's a coin flip. The reactions to earnings have been wild recently. So, yeah, I'm not participating in this. I had to take profits and get out of NVIDIA because of what happened mostly with Supermicro. Even with a hedge, a big move is going to hurt your portfolio. So it's just not worth it. And one last thing, somebody asked me to look at OPRA, not the talk show host. This stock, which is ADR out of Norway, develops browsers for mobile phones and PCs. And looks like it had a nice run. That's what I always look for in a stock, is a prior uptrend and a pullback. But this one's pulled back a little more than you would like. You'd like to see it find support at the 50. A couple other things I'd note about this stock is up down volume is below 1. So that would cause me to pause a little bit. They don't have cash flow, not much return on equity. And yeah, not not a lot of institutions behind this one. But good luck with this one. Like I said, I don't really know much about it. I'm just looking at the technicals here and a little bit of the fundamentals. And it does have the prior uptrend. So it's shown you the ability to make big moves, but now it's making the big move to the downside. You just want to look to see where it finds support and where it stops going down, because before it goes higher, it's got to stop going lower. Anyway, that's it for me today. Thank you for watching, and we never give up.